Do you recall in the beginning of this week where the US Treasury Department took the tag of China as a currency manipulator, where the set that was removed, the tag was removed, but I merely see that being the case. To be honest, I see this just a simple replacement with the SMB. On Monday, they called the Swiss National Bank a currency manipulator. At the same time, they called on Bern to cut taxes and spend more public money. That has supported the Swiss franc. It reached a high September 2018 level against the dollar. It was strong on the back of retail sales, but mainly on the Fed manufacturing industry index, which seems to suggest that manufacturing may start expanding once again. The ISM numbers are more important, of course, but this could be also suggesting that the ISM might start turning, at least tilting to the upside. Pound, on the other side, has been also moving up. Okay, and that I see two things being able to move the pound higher. The retail sales expected today, because the expectations are at 0.5%, and that follows a minus 0 points in negative contraction pretty much in the retail sales. So that might be one of the reasons. The other would be the fact that the European Union has announced that the extension on Brexit is not really up to the European Union. If Boris Johnson wants to leave January 31st and the transition ending at the end of 2020, then that might be the case. However, they do have to comply with this transition deadline. Talk about Aussie as well. I received some very good surprising house numbers the other day, but yesterday, while it was moving up, it started losing its stream due to stronger dollar. However, I am seeing more upside on the Aussie as well, as risk appetite is probably going to increase on the back of trade war. Now, starting with the dollar Swiss franc, we talked about this this potential pattern a while ago, right? I'm still seeing this move to the downside, and I'm still seeing this primary 1, primary 2, and then we'll go down for primary 3, which means we're going to have a 5 wave to the downside, 1, 2, 3, 4, and 5, which means that the long term is quite bearish for the dollar Swiss franc. Now, since last week, we saw this correction up here. Elliott wave theory says if one correction is long, then the other one is going to be short and sharp. This is exactly what happened, so that's why I call this wave 3, 4, and 5. We could see the 5 extending, okay? Don't get me wrong. We could see that extending down here. However, since we broke below this level, we have to assume that there's going to be a correction now, okay? This correction is likely to get us to this multi-year ascending trend line, okay? Near even the 0.5 Fibonacci retracement of this wave 1, and then start moving to the downside again. This is supported by the MACD and a little bit by the RSI also. Let's go on the pound, an outlook that we've talked about for a while now, 1, 2, 3, 4, and 5. And I see this as a 3 because this is this rolled out as a 5 wave, okay, in a smaller degree. It means that we're expecting a 4 and a 5. Right now, the 5 could take us to the descending, multi-year descending trend line that could be intersecting pretty much anywhere above the 34, 31, and the trend line pretty much. Now we've taken out the 38.2 Fibonacci extension over here. Okay, that's why we're expecting this move to continue to the downside with an ABC correction, right? We've had wave 1 done, wave B done at the 61.8 extension of this move to the downside, and wave C seems to be rolling to the downside as we speak, right? Now, the rule says that wave C can complete anywhere below wave A, so I'm expecting this to potentially be 1, 2, 3, 4, and then 5, okay? Taking out this level, now we could either have a 5 that ends over here and then we move up for 5, or we can even go down to 1.2676, which is a 100 Fibonacci extension, or anywhere up to 125.50 or so, which is wave 1. And last, Aussie dollar. Again, we talked about this being wave 4 for a while now. because I see this as an ABC running flat, okay? ABC, which is wave 4. Now, the rules say that we can finish this last wave C anywhere between the 61 and pretty much 95%, right? So anywhere between this area, this wave 4 could end. Now, because this is quite a move, right, I see this wave C potentially being an ending triangle, okay? That means that we can end this move up to the price slash ascending trend line intersection, okay? And that could take us above the 70.85, which is what is required for this scenario to play in. The MACD and the RSI both suggest that we could see prices moving up rather than lower down.